Looking at your 401k and looking at the stock market at the same time and wondering, oh my gosh, I need to hold on for this roller coaster. You're not alone, and I don't think that ride is going to end anytime soon. Now, that's my unprofessional opinion. The professional is Paul Schatz with Heritage Capital. He's here to give us the professional. And you're smiling, so I guess that's a good sign.
I'm always smiling. Look, if markets go down, we have opportunities. Markets go up, we have opportunities.
Okay, all right. Let's talk the first 6 months of the year, and I know we're already into September, but a little wonky thanks to the introduction of a word called tariffs.
Yes, sir.
And then a lot of mergers and acquisitions as well. Tell us, recap the first 6 months for us.
Sure. So I sat here in January, and I said I thought we'd have a mid-up single-digit year. I thought we'd have a 10% plus decline by July 4th. I did not see 20% coming, or the 19.5% that came. Look, that came, 10% came in 3 days from the tariff tantrum. It was $330 billion that became $660 billion. Markets weren't prepared. Markets can adapt and adjust like the Marines. They can't handle a surge in uncertainty, and that's what happened in early April.
So, okay, that was April. The rebound, though, was fast. And if you're just ignoring those first 4 months and looked at what happened during what's normally the quiet summer, is there a false hope that things are better?
There's definitely not a false hope. Look, I'm anti-tariffs. I'm a total free market guy. I want very low government intervention. I understand why they did and what they did. I just don't agree with that tax.
Sure.
Given that, we know there are tariffs. We know that we're going to have tariff uncertainty as far as the eye can see, at least until 2028.
There you go.
Right?
So in other words, I was right. Hang on to the roller coaster.
But the markets will adapt and adjust. And you know, all this tariff news that comes out subsequently, the impact's been less and less. The media makes a bigger deal of it than the markets do. The markets are moving on beyond tariffs.
Okay, maybe that's not the word that everyone is focusing on as much as, say, inflation, which is also kind of just looming in the distance, or is it not?
So I sat here the last 2 Januaries and I said,
roll that clip. We have
bring it back.
Yeah.
I thought inflation was really starting to die in 2023. I think it's dead. Our model shows we're going to have a whiff of warmer inflation for August, September, October, maybe November, but not above 3%.
But if the rates get cut, and the tariffs are there, whether you care about them or not, is that going to kind of offset whatever benefit you can get by buying with a lower rate?
No. Here's why. Tariffs are a one-shot deal of a higher price. Your pen was $1, the 10% tariff. Now it's $1.10, but it's $1.10 in the future as well. Inflation is the steady progression of higher prices. Inflation on balance, I thought 3% was the new 2%. I still think we're going to have inflation between 2 and 3. It's going to get warmer. Next year, it's going to get a little cooler.
These are things that scare people, though.
I know.
Right? How do you calm them down?
Well, first of all, and I hate when people say, well, take a long-term view and don't worry about it. Yeah, that's great, but your heart and your mind don't allow you to do that.
It doesn't work that way, right.
So I say, one, ignore the narratives and the spins. Geopolitics has no business in investing. People who invest based on politics are chasing their tail. You can't win. We download data. We analyze data. We invest on data. Data is what matters. The economy is going to get a little stronger this quarter. Deregulation, whether you like it or not, it's coming in Q3, really coming in Q4 and next year. The economy has a big tailwind that fully offsets tariffs and then some.
All right, so you're saying for the next 4 months, just hold on, but there's good things waiting, at least in the shorter medium term.
Use any decline we get in September to buy. You should get a run into at least January. The Dow's going to 50,000. That's my long-term target. I don't have a new one updated from there. The market's going to broaden out. It's not going to be 7 to 10 sexy stocks in AI. It's going to broaden out. So a lot of the stuff like that you see in Hartford is going to do better. We talked about Boeing earlier. A lot of these kind of boring, the drug, Merck, Pfizer, Bristol Myers, you're going to get a lot of stuff doing better.
All the stuff that people were kind of ignoring because they didn't have the letters A and I in their title, right?
That's right. And I think it's time for everything to broaden, and the rising tide lifts all boats.
There you go. I like the sound of that. Always more information on our website, fox61.com, and we're going to bring Paul back, and we're going to hold the clip, and we're going to roll him to see if he was right or wrong every time he comes in.
Thanks, my friend.
Always good
I appreciate it.